Welcome, everybody, to the January 2026 Fest Community Conversation. Delighted to have Jen Vandermeer as our conversation starter. I'm Ben Roberts, co-hosting along with Fyodor Ovchinnikov, and this is the third now in the new model for these conversations where we're really focused on creating a space for people to connect with one another, make new connections, deepen existing relationships, and be in a space of collective inquiry around questions that are relevant not only to the person who's the conversation starter, but to the larger field that Fest exists to support. And has been our practice a Miro board that we've been using to track all this. So let's take a look at that. Just to quickly review, our mission is to greatly accelerate the development of the field of financing of systemic transformation, FST. And on our call today, we're following again the same pattern as the calls in September and November. We start with a welcome and a check-in, put you into small groups to just connect with each other and get to know your groups, then move into our collective inquiry with a 10-minute presentation or provocation from our conversation starter, Jen Vandermeer in this case, then move you back into those same breakouts for about 20 minutes or so, come back for some full group reflections and conversation. We'll end with some updates and announcements and a closing checkout. So I think with that, we're ready for small groups. How would you characterize your role or roles in supporting the field of financing systemic transformation? And you can drop that in the chat. And we're also going to put you into small groups for 12 minutes. Okay, welcome back, everyone. So we're ready to move into the conversation starter portion of the call. I just want to review again the process and why we're here. FEST exists to support the larger field to accelerate the development of financing systemic transformation, or FST, which comprises all those working on financial transformation to increase the flow of and the ease of access to finance to address today's polycrisis, metacrisis. That includes public, private, foundational finance, and we see this financing piece as integral if we're to address the structural social inequality, environmental and economic crises. But the field itself still feels like it's very much emergent, and spaces like this to connect people who are looking from this systemic lens at finance feel like a significant service as we try to develop greater coherence and run many, many different models and experiments to explore this different way of gathering and moving money. And these calls are a collective inquiry process now. So rather than a presentation focus with a Q&A, which is what we had been doing for a couple of years in Fest, we're centering this around a question that's relevant to the larger field, provoked by some context setting from a particular conversation starter. In our case today, Jen Vandermeer, who we'll introduce in a second. So she'll talk for about 10 minutes. We'll move you back into your breakouts to pursue a question prompted by what Jen has to say. Then we'll come back to the full group and share together for another 20 minutes. We'll hear a few more reflections back from Jen at the end of that. So I think with that, I'm going to bounce it back over to Fyodor, who's going to give us a little bit of a recap on the previous two conversations and how this one builds on that.
Thank you, Ben. I was the first conversation starter in September, and I was coming from the perspective of Evolutionary Funding Collaboratory, which is a very grassroots translocal solidarity funding network. And I was in the breakout group with Sarah Edwards. And then we had this conversation and realized that actually, when we take actors on the two opposite sides of the spectrum, there is urgency to build bridges between those actors. So Sarah was our second conversation starter in November, and we decided to just continue with that flow to invite others specifically engaging with questions related to scale. How do we dance with this high trust, high context, and very large scale and very powerful actors? Back to Ben.
Yeah, just to quickly introduce Jen. So Jen Vandermeer is a former development banker, Wall Street analyst, entrepreneur, and designer turned practice academic. She's currently associate professor of transdisciplinary design at Parsons School of Design at the New School in New York City. Her work focuses on the design of systemic investment structures and business models as framing logics. And she's also a co-lead of FEST and has been a very active participant in many different dimensions of Fest from the beginning and right up to this day. So she'll also be giving us our update on all the different things that are happening in Fest if you want to get involved, not only in these community calls, but in some of the other different dimensions of what we're up to. And I think with that, we're ready to turn it over to you, Jen.
Okay, welcome. And thank you for that intro. I'll say I started in this way and kind of escaped Wall Street early and then jumped around quite a bit. Tried to get away. This is a sketch I did in a class. I tried to get away from Wall Street because it was super uncomfortable on so many levels. And then really jumped into design, internet, startups, started some nonprofits in the sustainable design space, each time trying to jump away from what I was doing. And really only started to realize that each time I jumped, the same thing we've seen with ESG and the co-optation of so many ideas, I'd find myself creating things and not having perceived the unintended consequences and predicted them and just sort of collapsing back onto myself. So the practice academic intent is really to allow myself to go back and reread some things that really help me see that original problem: feminist economics, complexity of all stripes, biology, even astrobiology, because I sometimes talk to tech bro types, helps me connect the dots with them, and to see what I've been up to. But I keep falling into this chasm. We all talk about it. It's a good chasm. There's mycelium down there. But I'm trying to crawl back up to kind of under the bedrock of Wall Street and make some waves. I'll tell you a quick story. The first thing I worked on was the Netscape IPO. I was a young analyst. I had just covered semiconductor equipment companies. This was given to me because it was low status. We had cynicism about this company inside the shop of the bank. We were just a syndicate, meaning just one of the many banks taking this company public. There were 5 revenue streams. My job was to make the Excel. I had to do this out of conversations, not much to analyze. It was too new with my boss. And he cynically just said, make it up as you go along. The IPO prospectus, that's these document here that tells you it's the issuing memorandum, had all of these risks like competition, pretty much predicted what would happen, which did. The company went public to huge success. It made the founders multi-millionaires, ended up collapsing when Microsoft launched its free browser. But lesson from my boss that day I've kept with me ever since, which is my job was not to do fundamental analysis, really understand the constituent parts of the company, do a fulsome, comprehensive, accounting, financial-based view, but just to predict the shape of the curve of the wave, and also to be the first to know when that wave was going south. And that's it. Our job was to give that to fund managers who were investing in many things, and this was the sliver of their portfolio that could make something called alpha, outperformance of the market, with our research. Okay, so jump a little forward. That man there with the hair on the left was Mark Andreessen, one of the co-founders of Netscape. He's now the co-partner of Andreessen Horowitz, which last week they owned 11% of all venture capital assets under management. And then last week they said, no, it's now 18% with an additional $15 billion raised. This person has gone on to, along with his co-founder, to advise the new administration in AI, cryptocurrency, but also immigration and university education and research. And this is being recorded. So I'll just say he's a wonderful, wonderful, wonderful person. I'm going to jump into story 2. I'm in New York City, so I go to any kind of conference I can to learn and understand. And I was at the Investment Integration Project Symposium. This is big asset managers, pensions, et cetera, talking about systems level investing. But I had worked on this black paper with the Inclusive Capital Collective, one of these COVID era, Black Lives Matter era moments of grants coming from Surdna Foundation to some groups to do some work on Black asset managers and wealth, and meeting with these folks, trying to figure out how I'm supposed to be helpful, as I'm neither a Black nor a real estate developer, but really interested in systemic analysis of how we change the system. Realized that my expertise in equity could be beneficial, because that was their question at the end of our first hour, which is we don't understand the equity part of our capital stack, which is grants, equity, debt, et cetera. They co-developed a paper. I had a bit part and kind of finagling things, but really helping to kind of frame the conversation of what the ask was. But the developers themselves are the real powerhouses. So this paper was produced out in the world. It had that systemic analysis. It also had the projects from Oakland, Baltimore, Chicago, and Atlanta, who all got a lot of attention, noise, and funding from all different sources, grant and investment, and what they needed. And then there I was in New York just last year, seeing Cerdna Foundation with their VP of sustainability and their investment officer. And I sketched this diagram of what I saw. So here you have $1 billion foundation, a certain percentage of that, 55% is drawn down each year. Some of that money a few years back went into a program officer to determine a grant gets dispersed to the Inclusive Capital Collective, shows up as some money to support. I was a volunteer in the way I am with FES, so it went to pay for some researchers doing the systemic analysis. And then a few years later, one of those projects shows up in the portfolio of the endowment. How did that happen? The foundation had a sustainability head who met with the program officer to learn about what they were working on. The foundation had increased its allocation towards sustainable investments in that view, mission aligned also with the Cerdna Foundation's goal of addressing systemic racism. The investment in a Chicago-based community-owned strip mall fit within this network, fit within the financial structure. And something was mentioned earlier by Fyodor that folks often share, that Sarah Edwards had shared, is $100 million is usually the beginning threshold to get into institutional capital. And the whole purpose of the Black paper was to explain why $100 million was more than that, would start to make it impossible for it to be community owned. And I won't go into the details of that. You can read the paper to understand that. But reframing that logic changed who sent money, and the fact that it wound up here because something shifted, a program officer talking to a sustainability officer. So I present this to you as a lever of change, not as like the solution, not as great news. I'm about to talk to you why it's going to be hard to replicate that in what we're up against because of these issues that mentioned in the talk, these role configurations of funder, grantee, investor, investee, evaluator, evaluated. These are like incompatible when we start to actually move to finance. This is a rare thing. So finally, the fiduciary standard. Modern portfolio theory. We haven't spent any time at FES talking about MPT, so it's really important that we do. So here's a talk I just gave last week. I'm on the advisory committee for investor responsibility at my university, which means I get to go up in front of our investment committee and pitch things. Sometimes these things are things I'm just representing from governance bodies. We get a lot of interesting conversations happening. And my most recent submission from this committee, the conversation I got about a way to potentially screen some investments was met with this response. We like modern portfolio theory. It means there's a lot of fish in the sea. All of our holdings go to managers of funds. We don't manage this money ourselves. The job of those managers is to maximize returns while minimizing risk through diversification. We're not going to constrain the managers from all the fish in the sea. We want them to be able to look at the whole sea. You can't just cast a net out and expect them to filter out every little bit. This is interesting to me because they had divested fossil fuels. So how did this happen? Why is it that an investment committee chose to divest from fossil fuels 11 years ago, but wouldn't hear a new request for a specific type of screen? I think is important for folks to understand. And the answer is, in New York City and many universities, you have hedge fund managers, private equity managers, lawyers who advise the financial industry on boards. This has been a shift in all endowment structures over the last several years, not just the management of the funds, but on the boards of the whole institution. These folks are smart, connected. One of them helped advise the model of the law that became the decision to allow university endowments to invest in private equity and hedge funds in the first place. And in a similar vein, understood that the job to be done was to do a similar model of the law to encourage endowments to have the flexibility and decision to divest from fossil fuels. The rational argument given was that these fossil fuel assets would become stranded. This was an 11 years ago argument. You wouldn't want to be holding these assets. Endowments hold them for the long term. They're not short-term investors. They're extremely long-term investors. And the only thing to do at this time, 11 years ago, was to consider fiduciarily prudent to wind down those assets. And there was a whole back then analysis that the industry wasn't ready for this. And so they even had a plan for how they might work with managers on getting to this shift. It wasn't going to happen right away. And the reason why the answer was no to more of a moral argument for why we should screen, there was no reason that it would affect the risk profile of the investments, that a moral argument alone is not something that would be considered. So modern portfolio theory, though, has some limitations. If it's all the fish in the sea, but the fish are in a sea that is polluted and the fish are getting sicker and the fisher people are getting sicker and everything else is degrading, we've got a little bit of a problem. So enter systems level investing, sort of our institutional sister to systemic investing. And the Investment Integration Project Symposium is like a yearly event where I sort of get to see endowments of all stripes kind of talk about this transition. The basic idea is that modern portfolio theory has limitations, in fact, that it's kind of bullshit, that the quantitative measures, capital asset pricing model, the math that operationalizes all of this, neglects the impact investments on the broader system. And so it struggles to account for the systems level risk that affect the whole market. So yes, this is an argument that, I don't know, you're 100. Yes, it is an argument that we have to be aware of this. Why? Because our finance is not viable and we're doing this for financial reasons. Yes, that's true. And I know that's kind of like, get some folks hackles up. Well, what do you mean? It's not about doing this because we want to be in service to life. I mean, it can be. And also, this is a purely financial argument. This has been something adopted by the Chartered Financial Advisors. It's been adopted by PRI and a number of other groups. And again, to the right, if you want to go through my deep rabbit hole, the provocation is really where this came from today. It's when we seek coherence across scales, what are we asking grassroots actors to become? And what would it mean for institutional capital to participate without dictating relational terms? You can see one example of that in that certain example of how that might happen there in an aligned, morally, fiduciarily, theoretically, and practical, like whole loop in $1 billion fund. This is how it might happen. And here's the reason why when that program officer walks over to their outsourced chief investment officer, why that answer might be no, is because, and this is the highest level I could give you of why that answer would be no. And we have to be prepared for that. And then I have my serial killer appendix of the difference between traditional finance, folks challenging modern portfolio theory, folks within our network and aligned to systemic investing, and then our beautiful financial ecosystems group here, how they all interrelate. And I'll pause there and end with our provocation for the next breakout.
Wonderful. Thank you, Jen. See you in 20 minutes. All right. Welcome back, everybody. We'll just hear some reflections, some highlights of the conversations we had in the breakouts.
Hi, Jen. Thank you for this. This is like way beyond what I don't know what I was expecting coming on this call, but I'm super excited to keep the conversation going. One of the biggest thing that came out was honestly even challenging the framing of the question with this idea that there's this bottom up, top down versus middle out. And that was something that Lisa had shared that I think was like really transformative for me in my thinking, in even kind of challenging the approach to thinking about it. And so honestly, we went on a tangent from there and kind of like just learning how things move and whether it's more industry based or whether it's bioregionally based, right? Understanding what does that kind of placemaking look like when trying to bring together funders. Without the mandate, they cannot say what needs to happen with those funds. And so it has to come directly from the family. And so this idea of how do we connect these larger families in order to be able to create those mandates so that we can move and influence what's happening systemically. But those are just some immediate thoughts that kind of came out that I wanted to share with like my impressions.
Wonderful. Fantastic. Thank you so much. Who wants to go next?
In our group, we talked about how investors look at risk and how the different types of languages can fit to create trust in the system for them to be able to understand the broader picture and see the risk of investing in the very, very profitable businesses that are very like short term, but create either damage to the environment or communities. And also we talked about how this very narrow view of user-centric design that also applies to financial strategy and business strategy can be maybe opened up by a more life-centered design that involves asking some questions about how nature works and how we affect nature and how nature affects us, and how we don't even know how our body works. I mean, our consciousness works in a very limited spectrum, but there are so many things we don't know. And that is the nature's intelligence that emerges, and that also kind of connects to this strategy by not limiting the strategy for an SDG or an outcome, but let it emerge as life.
I think I'll just bring up two things which prompted me to expand this idea of dictating relational terms. I work primarily in the food system sector, although it crosses over to many of the other economic sectors. But I brought this up in our discussion, is we were constantly seeking the producers in order to move capital. There's this constant, we need data, we need results, we need this, and we need, so on and so forth. Producers already have done that. Producers, we don't need any more data. We don't need any more. We have the results. We know what the intelligence, we have everything we need. And so I think there's been a breakdown of that, which is now starting to move, I would say, in the food system space. The bigger issue I see is this sort of systems literacy, which I think goes across to other economic sectors as well. There's a lack of understanding of the whole system, even though they say, oh, we just need the data from the producers. Actually, we do have that, but there's this lack of literacy of how a system moves and how it can scale in that movement. And so I think there's a real need to have producer-led, or in other economic systems, whoever it is at the forefront, leading that discussion on systems level change a bit more. I even see it in educational systems as well, where everything's about the data rather than if the institutions are actually working and producing results.
We had a wonderful conversation. I'm really impressed with the work that Magdalena was sharing. Now, as I'm kind of more on the grassroots side of things, it's really interesting how much financing side of things actually impact a lot of the work that you are doing. And I think, again, as you are involved in the system change day-to-day activities, it's very easy to consider those things just, fuel to run. But where this is the capital is coming from, how it's structured, actually does define a lot of things. And right now, as I'm sitting with one of the dilemmas in my own project, how much do you mold into the big system? How much do you stand on your integrity? That's a very practical conversation that I think I got a lot of interesting angles to think about for our little group conversation. System change folk need to learn and not shy away from capital. At least I'm talking for myself, coming from more of the relational side of things and less about money.
I can quickly share something. One of the things we were talking about in our group was the idea that leaders wear many hats. And I think the example was like, you're wearing the hat of like what needs to happen right now, maybe in my organization or my practice or my business, then what needs to happen in the future for that organization or business. And then there's even a third thing, which is like, where is the problem taking us in the field? And the idea that maybe part of what we're asking, and that oftentimes it's hard to spend time in 2 and 3 because you're so focused on one. And so it seems to me that in some ways, the answer to the provocation, which is like, what are we asking them to become, is I think we're asking grassroots or frontline practitioners to spend more time in 2 and 3. And part of what that raises for me is like, how are we releasing them from some of the constraints of number 1? What are we taking off the plate of someone on their day-to-day? Or what resources are we giving in order for them to even think about this problem of scale and coherence in the first place?
For me, it was that we all went into the room with the provocation. And it was, when we seek coherence across scales, what are we asking grassroots actors to become? What would it mean for institutional capital to participate without dictating the relational terms? What forecloses if we don't, and what opens if we do? And all 4 of us in that room were struggling to decode this question, apply it to the real world, and trying to figure out what exactly it was that was being asked of us. So I did what any normal person would do is I copy pasted it, put it over in my chat GPT and said, hey, what does this mean in plain English? And it said, if we want communities and big institutions to work together and help in a healthy way, what exactly are we expecting from the people on the ground? Can large investors participate without taking over the decision making? What do we lose if they can't or won't? And what becomes possible if they do? And just by taking that question and translating it over into a shared language that we could all respond to and understand, we were able to lead into a productive conversation.
I would have loved to have your chat GPT because we had a similar experience. Just the word coherence. What kind of coherence were we talking about? Was it financial coherence? Was it food security concept, looking at small farms to global agriculture and the interdependence of the food systems? And, that was my interpretation because that's my experience. So we did have a lot of discussion about, different frames and nuance. Are we losing that if we bring it into plain language, or are we empowering more input?
I think we had an interesting conversation, even on the language level, coming from the grassroots side. Even some of these conversations, I have to spend a lot of time afterwards unpacking what this means, learning the concepts. And so there's an element of, there's some asymmetry in terms of information, the knowledge that people on both sides have access to. And I think Pete has put it in chat that there's humans on both sides, but there's almost like an inhuman financial machine in the middle. So I'm very curious about, what does it mean? Because even the people on the grassroots have knowledge that maybe they are not able to translate to the people who are on the other side. So it seems like this translation work of like knowledge, language, what people have access to seems to be an important piece of the puzzle.
I think something that we're all recognizing or bumping into is that this is a journey, that there's an element of, we don't know actually how to do this. If we really knew how to do this, we wouldn't be in the existential soup we're sitting in. So there's something that helps to just breathe into that, which is no small thing, because we are all embedded in this world, which maintains these very patterns that we say we want to change. And we become blind to the ways that we, again, feed those very same patterns. And that's not from a blame-shame standpoint. That's just the kind of navigating in this world. So that's also came up in our conversation. Appreciated Cordell's input there around it being a journey, and to live into this relational way of being where people start to experience firsthand ways that they can be together and hear each other and get into deeper, and I'll use the word here, ontological inquiry of what we mean by these things, and how we've so easily slipped into these very siloed, compartmentalized ways of doing things, so that all fields, all of the disciplines, the professions, and the finance in particular that impacts all of us, is got such a narrow, dimensionally compressed view of life, which, of course, Andrea, you raised that as well. And so there's no easy narrative. There's no easy on board into this. It's how do we begin to find those threads that get us having the conversations that enable people to be just more who they are and where they are. And I describe this as the readiness for the messiness. With some of us, I describe it that way because this is messy. This is hard. And if we in this community at least can acknowledge it's hard and keep staying with that, staying with the discomfort as we bring in the different gifts that we each bring, some from the finance field, but frankly, a lot of people that are not in finance. If we can find ways of bringing us together to have some of these conversations in light of a world that's not working well for people and for life. So I think the potential we're all seeing is that more people are recognizing that it's not working. But then the question of, well, how do we co-navigate? Wow, We don't know. Let's start. Let's do it. Check.
Okay, Jen, it's all yours.
Well, first, I want to thank Dior for being the brave to first respond. Dior is a former student, I think my first student to show up to FEST. I haven't yet invited students because we are this ecology of folks that are institutional investors, grassroots organizers, systems stewards. So thank you, Dior, for showing up. I think Dior's first question in a class I once taught with her was, and Dior, by the way, is an amazing leader of a cooperative and involved in multiple things in Bronx and in New York City. Definitely get to know her. But one of the first questions she says, I just want to figure out how this whole money thing works. So I'm excited to have Dior back to figure that out. I think that is the question for a lot of systems change efforts that we've been in, is just how does this work, and have that curiosity. I really appreciate all the conversation about, throwing stuff into ChatGPT. One of our regulars, Erica, is always doing that to us. And I'll just say, as someone who's in this weird Master of Fine Arts of transdisciplinary design, like that's when we get in this messy space. And so thank you for dealing with nerdy language, wonky language, challenging it immediately with how do I translate this to humans and healthcare providers, farmers, and having those conversations, and just to encourage us to be able to go there and to go back again, because that language in a financial boardroom, it will work maybe to get you in the room, but not to paper the deal. And it might not be addressing some of the issues because it is not the language that could describe all the possibility spaces of negotiation. So we're going to be, as Donna said, in this for a while. This is, we hope, as a community to decode all this stuff, to research together. And we've learned doing some of our research activities together, these prototype research projects we did last year, that not one of us has the full picture. We're often using the same words to mean different things because we come from philanthropy, or we come from investing, or we come from life. And so that's what we hope FEST to be. So I really appreciate that. And I want to go back to, I forgot who said it about, it was Andrea. I mean, that's my answer to this question. What forecloses? If we don't do this, systemic investing becomes portfolio optimization, just like impact investing did, just like ESG did. Not investing in life, not investing in a word I use with folks that are Mars bound, not investing in habitability, the ability for life to continue to regenerate here or elsewhere, if you're astrally inclined, the conditions that allow the systems we're embedded within to persist and regenerate. The language I use with investors that are wealthy or powerful is your legacy is at risk. This is a word that's really important to extremely wealthy people and extremely powerful investors and lawyers, is legacy. They want their name to mean something. They want their children to thrive. And so it's a word I use it sounds very neutral, but it's very emotional. And it can get them almost to tears sometimes. I've had it happen a couple times. And so that's the language I use to just open up this conversation so that we can stand next to modern portfolio theory and really critique it. What opens up if we do capital, a difference, I'm going to still use the word scales for now, holding shared orientation toward what it means to maintain habitability while preserving the authority or agency of those proximate to the consequences, to assess not just the intention, but whether it's working. So that's the question I'm sitting with this year, is the who decides, how we decide, and how do we start to build the governance structures that I think need to precede the financial structures and all of the other systems that we need to redesign.
Jen, wonderful. And thank you, everybody, for the insights. This is just the middle of the conversation. It's not the beginning, but it's not the end, definitely. And we hope to see you next time. But before we go, we'll share some announcements.
So we are organized into subgroups here. FEST, I'm going to call it loosely business models in finance. What's our business model? And how do we, change finance? And sensing and field mapping. So you're welcome to join one of these groups. We're actively meeting. The big updates are, well, you're seeing the results of the convening meeting right now. The governance is something that's come up because we've become so active. We now need to coordinate. We have a pop-up finance ecosystem idea. We're going to start circulating with other folks in the field around the convenings that we hold as a field to see if we could prototype the way that this conversation is going and to support the field by convening important conversations the field needs, helping fund the field through a financing ecosystem to support field builders and the initiatives they steward, and experimenting with how convening supports the field, not just like go get a grant to do a research project to report it back out, but actually turn that into a convening and funding mechanism. And Ben has the best words for this, so I'll point back to him. The sensing and mapping group is actively meeting right now and is determined they want to map the field, not just our unique group here at FEST. I will leave the others for you to explore. We have prototypes to research, other groups that have emerged from FEST. And you can see our theory of change that was from a while back end there, because I've spoken a lot today.
Thank you so much, Jen.
Well, thank you for being in the messy conversation and moving in the real direction to break through some barriers and to make meaning together. Thank you.
Thanks all. Thank you so much for coming.
Thank you. This was wonderful.